Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for the evening of Tuesday, the 17th of March, 2020, about 5:23 p.m. Daylight Savings Time, which also means we're into the next day's trade. Now, if you watched my metals video, I know I made a mistake. The March dollar index expired yesterday, and I was still having it up there. Won't matter, but I realize it now. All right, remember, these boards are different than what I keep on my own computer, and we have to do all these for it. Let's talk about where we're at, because the Fed, the Treasury, and the Trump administration are throwing the kitchen sink at the market to cushion the blows that we're getting from the COVID-19. You know it. They know it. The world knows it. That's all you can do. The worst is yet to come in the case count. As more tests get out there, we're going to see more people with the situation. People that don't want to pay attention, well, you're going to get what they call the shut-in. They did it yesterday in San Francisco in 6 counties, that 6.7 million people. They're basically saying, close everything. Do similar to Italy. Different. You can get out of your house. This isn't China. Go for a jog. Go for a walk. Do not socialize. Do not go out with a lot of other people. Keep your communication 3 to 5 people. That's what's happening. New York City, I would not be surprised tomorrow is the day they declare something like that. The way to get ahead of this is to stop it with communication. I'm talking physical presence. That's what they're doing. I'm here in the Chicago Board of Trade. It's a ghost town. Came down today to work. There's absolutely no traffic, no restaurants open. The morning coffee places, most were not even doing much, and people are very, very conscious about all that. So we'll see what goes on, but this isn't good. Today we spent, if you were watching TV, I think it was about an hour-long press conference. Treasury Secretary Mnuchin, President Trump, all the bigwigs. You know, we're seeing what the Fed is doing. Everybody is put aside. They're bickering and they're trying to get this job to the point of cushioning the economy. But I'm not seeing this. I'm not seeing the pattern so far change from what I've been telling you. It seems to me that we go into a weekend, we get bad news over the weekend, the markets digest it Sunday night, the stock indices go down, we get a Tuesday reversal. I was talking about that, and until that pattern changes, it hasn't changed. So when I look at these markets and you look at a weekly area chart of closes, you're still down sharply for the week in the S&P. I mean, this is a big break, and all you did is get a little bit of a bounce today. When you look at the chart action, it's a meltdown. It's that simple. It's not a crash. It's just working itself continually down. And remember the days, February 19th? When valuations, everybody's wrong. That formula, the stocks are worth more money. You want to bet? The valuations came back into being. And we're seeing that as these markets are setting down. Could they come roaring back? Of course they could. But for the time being, we're a service economy. And as a service economy, be it the restaurants, the bar boys, I can go on, they're not at work. We get hurt from all this. So helicopter money, you got to think of that term. And if you don't understand the term, Google it. I'm not going to spend the video explaining it. But that's what the government is talking of doing, putting money into everybody's pocket. The difference is it's not giving the money to the corporations via tax where they're buying back all their stock, not doing money in the bank to withstand these type of events that might have come out of left field. I've got my own criticism there for some of that. Just giving it back to the shareholder. In any case, lower highs, lower lows as a technician. No sign of a bottom. Rallies are bounces in a bear market so far. What else? We've had massive crossovers where the 18-day average got under the 200. And as I said, it'll take time to see if that 100 ever crosses under the 2. It's not going to happen anytime soon. But with this crossover, you can't argue it forced the market into those lower lows, which algorithms and other events watch it, other types of trading tools. in Bollinger Bands. Yes, you get under them, but you'll pull back to the right, even in these meltdowns. And that's what happens. When you get back into the right-hand side, if you have embedded readings, be careful, because it means the pros are selling. Do we have an embedded reading? You don't know what the close is today, so we can't count today. Let's go to Tuesday. On Tuesday, both numbers were under 20. The day before, both numbers were under 20, but not the day before. So you don't have 3 days in a row yet. Tomorrow's going to be an important day. Does the market embed, or does it try to get away from doing that so it just stays in an oversold condition? I realize the trend is down, but that will come into play, and what it does is going to be important. You have the same dilemma in the Nasdaq. So the market's backed up, if you will, came back up after big breaks. But look what's happening here. You're about to get a big crossover of the 18-day average going under the 200. And I know you're going to say, well, Ira, it's dropped so much. I'm telling you, that's a bear sign as a technician. Throw the name off the chart. Don't try to put fundamentals into a virus situation. In the Dow, I want to throw out today's action. Day before, that's Tuesday. I realize I'm recording on Tuesday. But both numbers under 20, both under 20, and on Friday, not so. So we're at that junction where if you embed, then the pros start again, what? Selling on the rally. But there's another part to that. When you lose the embedded reading, it'll be telling you at that point, if it embeds, that it's losing its downside momentum. We saw that in the bonds and notes. The momentum moved before the price did. If you look at the Russell, this has been bearish. It's still got the embedded reading. All it did is move to the right-hand side. So until it's lost, I think the pros are still selling on the right-hand side when they get the opportunity. Now in the VIX, the market has climbed up into an overbought area. If we take a look at the close, both numbers over 80 today. Both numbers were over 80 the day before, but on Friday they were not. Overbought over the upper Bollinger Band, probably going to get a bit of a correction here to decide does it embed or not. T-bonds, I'll stick with what I teach. When you have an embedded reading and you lose it and you don't get it back, it often moves before price. Not always, but often, very often, in fact. And that was your first warning. What is it a sign of? It's a sign, to me, that the long side of this market, in terms of momentum, maybe not in terms of price, has ended. And the odds of price and the 18-day average, or the closest main moving average under the price, are likely to make a run at each other. Do they have to? No. Does it work all the time? Certainly not. Does it work more times than not? Go count. You tell me what you find on the chart. I spent years doing this with these counts. I'd have records. Does this work or doesn't? And trying to get the percentages. So here's your market making its run, and it hits it right through there. What's the trend now? Down. So have the bonds, when it got up all the way up here, priced in the worst case. It's very possible. This is not a small move. This is a monster. This is a year's worth of trading happening in 6 business days. I know you might think I'm nuts with what I'm saying there. I'm not, though. You moved today 7 full points. In bar parlance, that's monstrous in its size. So what did the market do? I think the market said for the time being, maybe permanent. I don't know. We got to a crazy number, and it'll take another form of Armageddon to get us back there. 10-year note, same thing. And the warning sign came right here. And that was it. When you lose an embedded reading, if you don't get it back right away, the odds favor that momentum is telling you that something is very wrong here. And all I'm looking for is a retracement. I don't know that it's going to change trend or not. In the case of this, the swing line even turned down with all this. Now I'm looking for that 18-day average, and that's exactly what I got. So the trend is down. The bias is down very quickly in bonds and notes. In the dollar index, what number did you go up to today? You see that upper Bollinger Band? According to what I teach, that's where I think the pros took money off the table. This is a heck of a run. It can go higher. Doesn't matter to me. The first challenge of Bollinger Bands and the downside or upside, especially in wide bands, I think the pros were stepping out of the market today. Eurocurrency hasn't gotten deep enough. Is the trend done anything? Well, you're getting what's called a kiss. And a kiss is when the 18-day average starts moving to another major average, in this case the 100, and they're coming at each other. Now, does it just come up to it and turn down, or does it get a crisscross and cross the other way with prices below it? This is going to be interesting. My guess is it's going to kiss it and try to stay to the downside. It's a guess. The trend is down. The bias is down. What would the pros be doing here? You're oversold as can be. I think they keep their hands in their pocket. Japanese yen. Again, you get up, you start rolling over with that momentum, and I know you don't believe it because that's what it's supposed to do. It's supposed to get you not believing it. The market's back up. No. I'm still going to say the odds favor it making a run to the 18-day average. The closest moving average could have been the 100 or the 200. In this case, that was it. So that's where you're at now in this market. In a downtrend, you'd have to take out to break it this high of 95.50, 4.5. The momentum is pointing down, and it's already open tonight. It's not oversold. Resistance here, but it's a lot of dollar risk. Bitcoin, paying attention to the lower Bollinger Band. Yes, it closed under it almost 3 days. Now it's moved to the right-hand side. What else? Well, you're losing the embedded reading. Watch this. You had 3. Now you're losing it. The market is suddenly saying the worst might be over, and it's ready to possibly make a run to the 18-day average. I don't care if it stays up or not. What do I care about? It's warning not to be short. That's all it's saying. If it re-embeds, rethink the position. But that's a big warning signal early on in the evening tonight. In the Brent versus WTI crude, as I told you, I've never seen it move this fast, this swiftly, unbelievable, down to the dollar level, and it's hanging in there. And as we're watching, the market has still got an embedded reading. It's moved to the right-hand side of the Bollinger Band, lower highs, lower lows. This is still a very bearish market. Same in WTI crude, embedded reading, still moving itself down, bearish market still. You'd have to lose the embedded readings to get me thinking different. In gasoline, embedded reading. What a price savings for America if we could drive anywhere. But that's why it's down here. We're not driving. We're not going anywhere, let alone driving somewhere. Have you looked out in your roads if you live by a big city? If you look to see what traffic's like, I don't know what it's doing in LA. I had friends that were still going out to dinner in LA last night. But I know in Chicago, there is no traffic. If you look inside a bus, it's 10%, 20% full, the ones I'm seeing. New York, I understand, is very similar as to what we are. Different. So that's why you're getting down. And I'm not saying New Yorkers use a lot of gasoline in the city. I certainly wouldn't own a car there. In nat gas, as much as the market tried to put on that battleground that because of the price war, we're going to see less, if you will, gas produced in the U.S., there's still this market overhang. And it showed itself yesterday, not today. We've had a pattern of a higher highs and a lower low. Then we started putting on, as I said yesterday, higher lows, lower high. And that's what I pointed out. Stuck right here. And today the market resolved to the downside. Been a very rough market, caught between the upper and lower Bollinger Bands is how I'd explain it. If you want to get our market information, instead of me talking loud about it, go to www.iraepstein.com, bottom right side, pick what you want. You'll see free offerings. Sign up. We'll get it to you. I'm Ira. Have a good day.